Look, I know it's a bit chaotic in markets, and many of you are first cycle in crypto, and I know that you need a bit of guidance and a bit of reassurance that everything's going to be okay. Listen, all of us have our lives and dreams in this whole kind of banana zone thesis. It all matters. We're all trying to unfuck our future. And although the majority of my work is in global macro investor, where Julian Patel and myself probably have, well, without question, have the largest, deepest, broadest macro crypto set of analysis of anywhere in the world, let's go through how not to fuck this up. I've got the Don't Fuck This Up t-shirt on. You can now understand again what I keep saying. If you're using leverage, you are going to get blown out and you're going to lose control of your tokens. That is rule number one. Do not lose control of your tokens. Do not use leverage. Don't FOMO and don't get fearful at the wrong points in the cycle. We have a framework. It's there to help you. We are still early stage within the final year of the crypto bull market when a lot of the big gains come.
Raoul Pal, in this flash update, dissects the current market environment, characterized by Bitcoin's retesting of the $80,000 level and pullbacks in tech stocks. He draws insights from his global macro investor report to explain the present volatility and the US dollar's impact on markets. Pal offers a framework for investors to understand these dynamics and potentially position themselves for future opportunities. Pal emphasizes that the recent market turbulence should not be unexpected. He attributes it to several factors. Crypto markets move in cycles, and what we're seeing is a natural phase. This doesn't necessarily signal a bear market, but rather a period of consolidation and recalibration. A strong dollar impacts global markets, influencing asset prices and potentially creating headwinds for international investments. The market is forward-looking, attempting to price in potential changes in economic policy, inflation, and growth. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Pal highlights the dollar's significant influence. A robust dollar can compress risk assets and shift capital flows. Investors should monitor dollar strength as a critical indicator. Pal points out the historical relationship between global M2 money supply and Bitcoin's price. This suggests that as M2 increases, Bitcoin tends to follow. Keep an eye on global liquidity trends. Despite a recent dip, Pal remains optimistic about Solana. He views it as a key player in the crypto space, driven by technological advancements and a vibrant ecosystem. Pal suggests the current economic and crypto cycle may extend into 2026, differing from traditional four-year cycles. This could imply a longer window of opportunity for strategic investments. Let's watch Raoul Pal's market update.
Look, I know it's a bit chaotic in markets, and many of you are first cycle in crypto, and I know that you need a bit of guidance and a bit of reassurance that everything's going to be okay. Listen, all of us have our lives and dreams in this whole kind of banana zone thesis. It all matters. We're all trying to unfuck our future. And although the majority of my work is in global macro investor, where Julian Patel and myself probably have, well, without question, have the largest, deepest, broadest macro crypto set of analysis of anywhere in the world, let's go through how not to fuck this up. I've got the Don't Fuck This Up t-shirt on. You can now understand again what I keep saying. If you're using leverage, you are going to get blown out and you're going to lose control of your tokens. That is rule number one. Do not lose control of your tokens. Do not use leverage. Don't FOMO and don't get fearful at the wrong points in the cycle. We have a framework. It's there to help you. We are still early stage within the final year of the crypto bull market when a lot of the big gains come. It's time not to lose your shit. Have patience. See the bigger picture. Also, how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course. And you're saying to me, oh my God, my fucking portfolio is down 80%. It's because you're not using the Don't Fuck This Up thesis, which is you can only have a small part of your portfolio in the smaller tokens. Yes, I also understand that Solana is down 55% or 53% today, and it's painful for many of you because Solana's a big position. But again, over time, you'll see that this kind of volatility is normal in a token at this stage, and you should be fine with all of that. So if you can, you buy the dip. And let me show you why and how. So I'm going to run through some charts for you that Julian and I put together specifically for you. These are from Global Macro Investor, which is my preeminent research service. Firstly, the chart that everybody knows about. This is the chart Julian and I came up with, Global M2 in dollars with a 10-week lead over Bitcoin. Now, we were not sure whether it was going to follow this exactly because we had an identical setup in Global M2 in 2017 in the last Trump cycle. And what happened is crypto collapsed 35% in a week and then slowly recovered with CHOP. I wasn't sure whether we were going to have the full sell-off to follow this pattern or we were going to go sideways over the period. We eventually went sideways first and then had the sell-off. Either way, it's on track exactly as Global M2. What it's saying to you is that financial conditions that tightened last year due to the dollar rallying in anticipation of Trump and also rates going up in anticipation of tariffs, well, that is what's playing through now. Now, if you look at the chart going forwards, that reverses. Yes, there's going to be a period of chop. We're going to be finding the lows around here, and I'll come more on that in a sec. Then there's a period of chop, and then we start coming back up the other side. So it's nothing to concern yourselves with. Volatility is part of the game. Without the volatility on the downside, you don't get the 150% returns or more on the upside. So anyway, calm down, have patience, let this play out. Solana, I know many of you are in Solana, and Solana got nuked because of the collapse of the meme coin economy. Now, I think Solana, as you know, is a very broad, deep protocol. There is a lot of activity that goes on. There will be other activity that replaces memes. Some memes will come back to life. It is not what people are saying. It's a scam coin. It's a dead coin. It's all fucking nonsense. But Solana has overshot versus Global M2. And that is this last leg of the cycle. So Solana is looking very cheap. And I'll show you a bit more on that in a sec. So that's interesting. Again, you should be thinking about the dips. Solana should outperform Bitcoin for the rest of this cycle and Ethereum too, with SUI outperforming Solana. Those are my bets. Now, I don't want to hear from you saying, yeah, but what about this token and that token and my token's better than your token? This is not a fucking player versus player world. It is a player versus everything. We all want everybody to succeed here. Follow the don't fuck this up thesis. Don't have all of your stuff in small altcoins. Have about 80 or 90% in the main tokens and you'll be fine. But again, this is not a player versus player. We're not trying to outcompete with each other. We're all trying to win here. And that's very important to me. Okay, so financial conditions are kind of the big daddy of all of this. And the 3-month and 3-month rate of change of Bitcoin is driven by financial conditions, which leads by 3 months. So financial conditions obviously tightened because of the dollar and rates back in last year. Now Bitcoin has fully priced that in. So we're at the price point that is right. Now, could it then chop around along the bottom until it starts mirroring the rally in financial conditions? Possibly. This is also obviously very similar to the Global M2 chart because they're all highly correlated. I just want to show it to you in a different way. The next chart is what you're hearing a lot of noise about is there's an economic weakness coming. Economic data's coming out weak. Yes, it is. And it's been driven by the dollar last year. Again, there is a lead here, and the dollar strength last year is causing economic weakness. This is the reason everybody wants a weaker dollar. China wants a weaker dollar so they can stimulate. They're desperate to stimulate. The world has a lot of dollar debts. They need a weaker dollar to service those debts. The US needs a weaker dollar to export goods. The global economy needs a weaker dollar. But first, we're going to see that weakening of the US economy because of what happened last year in the dollar. And then things will start to change again and the economic cycle will pick up. Now, that probably also means that rates will come lower because economic data is weaker. So that's playing into our idea that financial conditions are going to ease over time. So it's yet building a more positive case. No, it's not going to be a recession. All of that talk is nonsense. Economic data will weaken for a bit and then strengthen. But this is all good for us. Yes, tech stocks are slightly worried about weaker growth. But again, when we can look forwards, using the analysis, we can see recovery is round the corner. Now, when we look at last time around in 2017 when Trump came in, we saw a very similar thing. Economic surprises fell off a cliff because the dollar had strengthened in anticipation of Trump coming into office. That then eventually reversed and the economic cycle picked up massively and the dollar weakened hugely. And that drove what was a very large crypto and risk cycle, even though the Fed were raising rates. You see, global financial conditions are the key thing here. And that could be driven by the US, or it could be driven by China, or it could be driven by Europe. It could be any of these economic powers, or it could be all of them. So as the dollar weakens, we're already seeing that mechanisms like dollar yen are starting to move a lot more. Now, dollar yen is incredibly important because the Japanese banking system is the heart of the Eurodollar system. They're the ones who lend out dollars into the global economy, and that finds itself its backdoor into China that allows China to service its dollar debts. And if the dollar is weaker, then China can weaken its currency. It can then stimulate more aggressively. It needs to do trillions of dollars of QE to service the bankrupt real estate sector and other parts of the non-performing loan sector. So anyway, that's all to come.
Pal playfully refers to a banana zone, a period where the market might appear irrational or detached from traditional economic indicators. This is often fueled by speculation and excess liquidity. Understanding when the market enters this phase can help investors manage expectations and avoid overextending themselves. Pal briefly touches on the potential impact of Trump's policies, particularly tariffs, on the market. Tariffs could lead to inflationary pressures and affect global trade, creating both risks and opportunities for investors. Raoul Pal's analysis suggests a nuanced approach to the current market. While volatility is present, he sees it as a natural part of the cycle. By understanding the key drivers, monitoring relevant indicators, and maintaining a long-term perspective, investors can navigate the turbulence and potentially capitalize on emerging opportunities in the crypto and broader financial markets.